Hey everybody, Courtney Smith here with our March 1st Wall Street winners. This is our March 1st disclaimer. All right, the market's been down a little bit. We told you about why this was going to happen a couple of weeks ago, and it's happening. We've talked about the seasonality. We talked about the purple predictor. We told you what was going to happen. Now what's going to happen? Well, I'll tell you what's going to happen. It's going to go down a little bit more, but not much more. We're down not even 5%. We're down about 3%. I said we might get up to 5%. So we should look at maybe getting down to 3,700 on the S&P, something like that. I don't think we're going to get all the way down like a 10% correction. That's not in the cards right now. When generous Jerome Powell is standing on street corners handing out $20 bills, it's very hard to have a bear market. Typically, that money goes into the stock market and forces it higher. So look for a little bit of a dip here, continued dip this week, and then start looking for the big rebound the following week. Dow Jones, a little bit more selling pressure than buying pressure. And the NASDAQ, though, it's being hit a little bit harder. But notice that the purple predictor is actually turning bullish. So this will be the leader on the upside. Remember, take notes. Always have a piece of paper and pen to write down what I tell you what's going to happen. Okay, here we have we're still on a bull signal on the stock market for seasonality, and we're neutral now on utilities, neutral. So here's one of the reasons why I think we're going to start to rally soon. Look at the purple and red lines down at the bottom. They bottom out here in the first week of March and then start a pretty good rally, okay? Particularly if we use the first year of a Democratic president. That's the kind of purpley line that rallies quite strongly through the rest of the year. So, of course, I hope that's the scenario that we're going to be in. The red line is a possibility post-election year after the incumbent party loss. But generally speaking, I think that the purple line is the more valid line, and that'll give us a pretty good rally this year. Asset allocation, they took money out of the stock market and put it back into bonds. Now, this is interesting. Watch this. It tells you that they're being more conservative. They're saying, you know what? The market's getting too risky. It's getting too frothy. It's getting too bubblicious. So let's take some profits and put them into the bond market. But wait a second. Our stock market RISKDICATOR actually moved back to the old all-time highs saying, well, okay, but if we're going to be in stocks, let's rock and roll. No more conservative stuff. And in fact, utilities are the worst performing S&P sector over the last 5 days. Global shares following the U.S. lower. Yield curve, a little bit of a hook at the very end there, but no big deal. That rally is unsustainable. We got to the 150 level, which I've always said makes me very, very bullish. Now, the problem is it's occurring a year late, but I would have preferred if we got to 150 a year ago. But still, this is a good positive yield curve, and that's positive for the economy and positive for the stock market. So looking very good here. Bond market plunged early in the week, but we got a good rally on Friday as, once again, money. Listen, you see, you're here at Wall Street Winners because, why'd the bond market rally? Well, because they took money out of stocks. Got it? We're telling you what's going on. We're telling you who's doing what to whom. Over here, bond yields continue to move higher. Everything's moving higher except the gold market. But commodity prices, which are a leading indicator of inflation, are skyrocketing. The blue line, which is German 10-year notes, that's skyrocketing. So it's all looking pretty bullish. Dollar got a pop here late in the week, but generally speaking, I got to tell you, it's so boring to me. I generally am slightly bullish, but I don't really care. Gold plunged on Friday. Once again, they're taking money out of markets and putting it into bonds. They're scared. So gold is not acting as a safe haven here at all. And I think that one of the things we have to look at is with all the monetary stimulus, which is supporting the bond market, supporting the stock market, why isn't it supporting the gold market? And I think the gold market is looking at the deflationary aspects that are going on there. What, Courtney? How could we have deflationary factors when the stock market is being pumped up by Fed policy of pumping out trillions of dollars, and jumping Joe Biden, he's pumping fiscal policy like you can't believe. How could we be deflationary? I'll tell you why. Because of debt. The debt is so large, and debt is massively deflationary, because what happens is people have to work really hard to pay off the debt. And now we're to the point where there's so much debt that we're struggling to pay off the interest, not even the principal. And so as a result, the economy can never really get going as strong as it has in the past. And the threat of debt default, and every time debt is defaulted on, that's deflationary. I'm afraid that the gold market may be looking at that scenario. Gold key indicators, slightly bullish, but the most important one is the one at the bottom, and it's plunging. Crude oil down on Friday, but the rest of the week was pretty strong. Listen, I've been out of sync with I'm always honest with you. I've been out of sync with this oil market for a few months, okay? I called it perfectly last year, but this month I better keep my mouth shut until I really get in sync with this market. Bitcoin, on the other hand, I've been calling this market beautifully. You should be long and nervous. Purple predictor remains bullish. Trend is bullish. You got to be long. All right, freebies, thanks very much for coming. We will see you next week. Fully paid up members, hang on 1 second. Hey, freebies for Wall Street Winners. Really appreciate having you here and love to have you participate in the Wall Street Winners every week. But I also wanted to show you where I get a lot of my information and where I monitor my information, and it's from the Stock Butler, stockbutler.com. And what it is that it takes the system that I teach in my Stock Financial Freedom System course, my live 2-day seminar, and it codifies and systematizes and makes it super easy to use. Let me just show you some of the things. I would go there, read their literature. That's really great. But let me show you a couple of things that I use. So I always talk about in Wall Street Winners our best of the best stocks. Now, when you're a fully paid up member, you see my best of the best stocks. But for example, I can come up here and I hit rate and I go to best of the best and I click on it. Now I've already signed in. There it is. There's my best of the best stock. These are the best of the best stocks that you should be looking at buying. In this particular case, you can see the green one is a new one this week. So guess what? In the fully paid up section, this is a new recommendation. We also, Stock Butler also rates the stocks, A, B, C. Here is a change. This one was changed in its rating. So it does some amazing things. It makes it super easy for you to trade, to monitor. It also has other techniques up here. Our hot hands, our pit bulls, seasonality, advanced stock list, many different ways in order to find great stocks and then to monitor them. So when you click on one of these stocks, it comes back and it tells you how the rating occurred. Here's the actual analysis that went in to rating this stock a B. Incredible. And the cost is nominal. I highly recommend it. Go there to stockbutler.com and check it out. I think you're going to love it. Talk to you later.